Welcome back to another episode of the Anatomy of the Trade. Today we're going to look at the crypto world, and we're going to look at some of the trades that I currently have and discuss their viability and also analysis and execution, as always. So with that, let's look at some of them. And we're going to start with the Bitcoin. So I don't necessarily have a position in Bitcoin in my personal account. I'm exposed to Bitcoin through hedge fund. And I wonder, Franz, what you think about, where we are in the structure and what do you see here? And this is a 4-hour chart. We could do the daily, but I think 4-hour just reflects all of the structural elements. So what are your first thoughts, Franz, on this?
Okay. Hey, Roman. Well, for me, first of all, I'm not even a newbie as far as crypto. I'm just not involved in it. So this is, take whatever I say with a huge grain of salt. But
the
when
chart
I see, yeah, with the chart, and I think also starting with Bitcoin, because it's the, it's sort of the leadership and the, the biggie in the group. So I think it definitely makes sense to start with it. And I like, I'm just going to basically parrot what you've been saying in some of our recent classes, where when you look at the structure, you'll see major kind of swings, first of all, and as we reach the kind of the apogee of each swing, supply comes in, but what is the effect of that supply? And if you look at each of these, I mean, right there, and that the one that you just notated, that's a lot of supply. And yet, what is the intention? Obviously, is to knock this thing off the horse. But what's the result? The result is we just come down into what looks like, to me, a very nice, talking between the 22nd of February and the 8th of March, a very Wyckoffian looking accumulation structure for the next move up. I mean, we've got the initial selling climax there. We've got the automatic rally that then occurs. We've got a couple of tests that come in. One slightly undercuts the support, but then look what happens. Right after that little sign of weakness, minor sign of weakness, we get a very strong rally back up to the top of the range, which just tells you that, our bias is, I mean, we've got to have a bullish bias here. And then what you've marked as phase C, doesn't come back even to resistance or support rather, and a beautiful test, and off you go again to another sign of strength. And then we've got this, you're ahead of me, Roman, but we've got this downtrending trading range, which you've got here, which again looks like accumulation, because if you look at what you've notated as phase C, look where it comes. I mean, almost perfect sort of backing up action, right down onto the previous, what was resistance is now support. And look what happens immediately after that. And it doesn't take a whole lot. I mean, you've got some supply pushing it down to that level, but look at the rally that happens. I mean, there's just very little demand to get this nice move back up nearly to the previous high. And now we're not seeing, we're seeing, you notated there's some supply coming in, but comparing it to where supply has come in at previous sort of analogous situations, it's getting less and less and less. So that's my take. I mean, it looks like it's ready to go higher.
Yeah, this last bulge of volume increase where the volume goes like this, it's smaller than anything that we've seen before, and the result of it is so minimal. So that is suggestion for continuation. That is suggestion for absorption. So we have to see some kind of confirmation. Our confirmation would be overcoming 60, then overcoming 62. So that would confirm that absorption successfully has happened here. So it still needs to break out, but still, this is an element of absorption, whether it's going to fail or it's going to materialize. We're still seeing higher prices, or if we're going to have a reaction, it's probably going to be confined within the boundaries of this range. I want to talk about something else here. It's very important to define, what I call the most important bars on the chart. So, for instance, this bar right here is of utmost importance. Why? For different multiple reasons. We are overcoming the resistance cluster from this area, and we are overcoming it decisively. And even though it was on news and the volume was high, but still the effect of this, the result, is extremely important, and it shows a lot of bullishness breaking out like this. Then we see a loss of momentum, which is natural after so much demand coming in and demand winds down. So we're going to have that loss of momentum. And we know that after that, there's going to be a reaction. A reaction to where? And that's the most important question. To here, to this bar. Now let's assess, how the price gets there and how does it penetrate this value zone where there was aggressive buying. Because our expectation is, as the price comes back during this reaction into this zone, we're going to incur some kind of additional buying there. Just because this was the previous buying opportunity for some of the institutions, they saw value at that price. Therefore, our assumption is that they're going to see the value of the price at this level again. We don't have big penetration of that bar. I mean, we probably go into, what, 1/3 of the top of that bar. And even though supply is actually quite extensive and quite large, we don't have a big penetration of that bar. So that support suggests it's still bullishness, still higher prices. Then what would be the analog of this breakout from the next formation? Probably somewhere here, right? Probably where we are kind of increasing the demand signature overall on the way up. And, we're having this breakout above this level of the resistance where we see last capitulation, multiple attempts to go up. So this is an important level. What do we do with this? We definitely come and retest this level again. And in this case, we're retesting a little bit more. So we're going even to the lower part of this big combo, big significant bar. So there is some weakness here in the way how it penetrated the whole thing. But obviously, overall long-term bullishness, we're expecting the rally here. And that's why I'm saying we have to see what's going to happen here. Yes, we're seeing some absorption. There is inability to continue to the downside, but it needs to resolve itself and confirm. Otherwise it will fail. So if it fails, we're expecting maybe again continuation and retest of this area again, and then continuation to the upside. Or even if that, if we confirm and go to the upside, then that would act as a confirmation of this absorption. And that's kind of the story. There's a lot of bullishness, and there are a lot of some kind of conditions that some people thinking that shortening of the thrust, then after this we're going to go to 12,000. Unlikely that we're going to revisit 12,000 anytime soon for this particular asset. All right, well, let's jump to something else.
Before you do that, Roman,
yeah.
Just one observation: where this last downswing took us into the body of the previous significant part of the upside. Do you think we might kind of make some sort of a deduction from that maybe there is going to be more of a need for maybe one more reaction before this is all ready to go?
Just the way how it penetrated it, there could be a possibility of another reaction. I think like to this low for synchronicity, and then this would be the upper boundary of this breakout. So maybe they'll find some bids right in this area. So
you know where that might also kind of fit into the picture would be with the previous. It's a shorter correction, but the accumulation, that last move back down in the 22nd of February through early March move didn't come all the way back down into the lows of the trading range. It didn't come all the way back down into support. So maybe we see the same thing like you just kind of described the possibility. So
okay, all right. Well, let's jump to other things here. So I'm gonna show you guys my positions that were initiated somewhere in March. And I have currently 5 positions. Let's start with this one. So this is Dodge. And for those of you who are not familiar with crypto movements, my gosh, I mean, like if they move, they move. I mean, like they move really fast and a lot. So you kind of could see those big spikes, big volume spikes, and then a long period of inactivity. So I don't think that this entry right here, this is in red arrow, this was the entry, that it was the most efficient entry right here, just because nothing happens afterwards. And that's how, cryptos are in a lot of cases. It's just, they're so inactive and then just there's some kind of spark. So I was thinking that it's going to take off right here. Probably misjudgment on the volume part. I mean, like if it's going to take off, it's going to be like a big, big bar, big volume signature, like we're seeing here at the beginning of the move. So I'm still getting used to this. And then I scale down with this purple arrow right here as I was expecting some kind of reaction. So I actually decreased the size for this position. And today, this is kind of like the move that we have. Being negated almost instantly, even though the volume signature is really big. So you kind of have to wait and see for the test to conclude. You can't really act on this. I'm not sure if this is the best position so far, just even to keep, but I've trimmed it quite a lot, so there is not a lot here for me of interest. So, Franz, let's jump to something else. I mean, this is not a big interesting position, but this one is. So this is in bad. So there is a big causality at the bottom, and now we are in the uptrend. So we just had this major sign of strength and a backing up action. So, and then we're having a smaller sign of strength for this structure and a smaller backing up action, like this. So we're entering right at the on the reaction to the support, which acts as a backup, and then there is a continuation. And I mean, the targets on these things are really, really high. So something like $5, $6. And so there is no reason for us to do anything as long as we're seeing the picture of increasing demand throughout the whole uptrend. So we know that the momentum is still there. Once we're going to see something like this, where demand is diminishing and yet we're pushing higher, that would be a forewarning for some kind of either more meaningful reaction or maybe even a terminal stop in action. So what do you think about this, Franz?
I really like the entry. You have a breakout, nice volume spike. You know that a significant bar is going to have some sort of test after an action like that, and the action comes right back onto prior resistance, now support, and so I really like the entry. And it didn't take. This is a pretty efficient trade because it didn't take very long before that big spike between the 15th and the 18th, and percentage wise, that's sort of mind boggling. But
yeah, it is mind boggling. And right now it still has this kind of like a bullish pattern where the price just making lower local higher highs, higher lows. It's within the body of this last climactic bar. So all of the price action is contained within this area. It is above this breakout bar, which is even better in terms of like, we are just touching the upper part of this breakout bar. So that shows still some strength. So there's no reason to do anything here, but maybe like to add. Okay, this position has been opened just recently. So again, big pause, big run up, climactic finish, climactic run into the formation, which is this. And then we have first reaction, and then we have a second reaction of the same magnitude, of the same quality in terms of how supply comes in with volume spikes, but there is less selling. There is a much higher low as a result. There is only a little bit of the sprint situation where locally we go below. And now we're testing, and we are trying to break out. So we need to confirm that. A confirmation would be overcoming this whole area right here. So we need something like this. Franz, what do you think about the positioning of this entry?
Well, you talk about two different types of entries. One is with a, let me get that, sorry. One is with a confirmation out of an obvious, kind of setup. The other is what you call a conditional setup. And clearly, I think that's what you're looking at here are the conditions in place for that bar that you've drawn in there. And I think they are. So that's basically my observation here. You might want to expound on that a little bit more about the difference between a conditional and a confirmed entry, because I think it's a good point of discussion.
Well, usually conditional trades are going to be something like this, around this area. Let's say where we see the climactic run. So it's condition in itself. And then we could time it. We could time it with specific bars. So this is like the most demand and supply in one bar. Then everything goes down. Everything goes down. So like this bar would be a good exit point. So somewhere right here, or the negation of this bar. So somewhere here. You could also have other conditional trades like we're seeing phase C type of characteristics here on this decline where we have a second point of fear. We've tested before. Phase B has been quite strong with the rally and ability of the price to stay at the resistance level, and then volatility increases, and then test. So the testing of it is more of the condition for the sprint, and confirmation again would be this type of bar. So you could enter on the confirmation as well, and we are entering more on the structure. All right, let's jump to something else. Cyan coin. So a long-term picture, again, very similar, very kind of similar look to a lot of them. And because I'm just entering the market like in March, I'm given whatever is there in the market. I'm not necessarily like, I would love to go back and just, open the account somewhere here. That would be awesome, but that's not the case. So you kind of trade what you're given. So sign of strength, and then a backup apex formation. So our entry here in expectation of the breakout continuation. I like the move here, here, here. So there is still increasing momentum. And I was wondering about the volume signature on the next move, and it's higher. So it is important to see that progression of more participants jumping on the train, especially in the speculative assets like any type of crypto. So from there, it's kind of easy, right? You're just enjoying, again, tremendous, what is it, almost like ×3 rally here. I think that maybe is some of the mistakes that I would just pick on this, not adding here, or maybe adding here, although I'm just fully invested at this point. And then obviously the most important bar was here. And again, we want to see what kind of penetration of this breakout bar we're going to have. So we're seeing the intraday penetration on this bar, which could be interpreted as a spring relative to these big bars, let's say 1/2 level. So we're sprinting it and very bullishly closing to the upside. Franz, what are your thoughts on this position?
Well, it's a thing of beauty, and I'm just taken aback by how perfectly, really, this crypto fits the Wyckoff methodology.
Mm-hmm.
It's almost more transparent than the stock market, for example, at least right now. So that's
Well, this
basically
market
what
is still immature in the sense of immaturity for the number of market participants and the money that are being traded there. Although it's a huge capitalization for the whole market, it's just like wow. But in terms of the I would say the institutional presence is not that extremely obvious. We're still seeing a lot of institutions trying to penetrate this market, trying to go into this market and become, present. So I think this process is still going to go on for some years because we're all going to be exposed to cryptocurrencies, I believe, at some point. And the adaptation of the cryptos is going to be more accepted. So institutions will have to be here. So for now, because of that, we don't have a lot of institutional money, but there is some. So that's what warrants such big quick moves when they come in and they just need to have a specific token or coin, um, and that's why it produces such big moves. And I might be completely wrong about this, but that's just my view. Okay, so what else? Last one. So this is Tron. Again, a very beautiful formation. Multiple kind of levels for the formation. Here is one. Here is another one. Major sign of strength above the long time resistance. And then we go into the backing up action, where we have a small distributional range, change of behavior, and then kind of like grinding up in the feather type manner. So first entry here, sign of strength. Second entry here on the backup. And then a really nice recovery and continuation. So I would say we're just at the beginning of this move. So I'm only holding this as a long-term investment. I do not have any purpose to day trade it or swing trade it or anything of this sort. This is just like buy and hold type of strategy with the targets in my mind that are way above, where we are right now. So, Franz, your thoughts?
Well, this last run at the end of March that we're seeing here with this big volume, that establishes, I think, another sort of significant bar, and it's obviously a breakout. So once again, I think you draw your, what is the important area going forward, and there it is. So, just keep that in mind as you're invested in this.
Any type of breakout that we are observing is going to be important because of a couple of reasons. So institutions are going to be present here. You can see this in the volume signature. So they are buying, and that pushes the price up. So then this level usually should be retested, and the quality of the test itself will tell you, what might potentially happen next. So here we're testing into the low, but the recovery out of this low is pretty dynamic. I mean, we've seen this bar. So then we are thinking about this bar, and this bar is being tested, flatly. So this was another point of entry right here. And now, yes, this is going to be the most important area. Okay, Well, this is it for this episode, guys. A little bit unexpected, but still within the realm of what we usually discuss during the Anatomy of a Trade videos. Thank you so much for watching, and we'll catch you next week. Thank you, Franz.
Thank you. Very interesting, Roman.